Hello and welcome to BQ Prime. You're watching IPO Adda, and the company in focus today is Bikaji Foods International. It's one of the third largest bhujia manufacturer in the country. And joining me is Mr. Deepak Agarwal, who is the managing director, and Rishabh Jain, who is the chief financial officer of the company. Deepak, thank you very much for joining us on BQ Prime. To begin with, you're coming out with an IPO with a price band of 285 to 300 rupees. It's completely offer for sale, and at the upper end of the price band, you're valued at close to 7,500 crores. Um, why aren't you looking at fresh capital, and why is it only OFS? Deepak, your audio is muted. So,
Sorry.
yeah.
So, sir, first of all, good morning, everyone. And uh, right now, we don't need cash for our existing plans or our existing projects. And also, last year we got an approval of a PLI scheme, where we will also get subsidized in next 4 5 years. So, by which all these things we plan in a way that for next 2 years we really don't need any extra cash. So this is
Okay.
all for offer for sale, and
Hmm.
a lot many projects are going on, but still it's all managing.
Okay. Let me get a big question out of the way. You have said in your RHP that you have your one of the group companies is Haldiram Foods International. What is the kind of relationship that you have with them, and what is the extent of RPT or related party transactions that you have, and is it part of the same group or consolidated, or is it family?
It's a family. It's a Haldiram, Delhi and Nagpur are real. My father's brothers. Like Nagpur is my real Tauji and Delhi is my real uncle. But we don't have any cross holdings or any related transactions. Sometimes we have a transactions from Delhi or from Nagpur that is regarding about our ingredients or about raw material or about some spices, but it's not like that that we are selling to each other, or we are doing or we have a cross holdings. It's all individual profit centers, all individual manufacturing centers.
Mhm. Coming to your financials, it was we've seen a growth there, but my guess is that there has been a lot of pressure with respect to raw material. Rishabh, can you come in
Yeah.
here with respect to what is the kind of pressure that you have on raw material, and has it eased a bit in the last quarter?
Yeah, sure. So last 18 months has been huge inflationary pressure across all key raw material, be it edible oil, be it paper prices, or be it key pulses. But yeah, so first quarter was tough for us and also for all the food brand. But second quarter we are seeing cooling off the prices in edible oil, and this year we are looking at good crop in India. So cotton crop is reasonably good. Key pulses we are looking downward trend. So of course second quarter is looking good compared to first quarter. But yeah, so we cannot comment much beyond this. But yeah, looking good, and we are looking downward trend across all key raw materials.
I'm asking this because your EBITDA margin, which was 8.7% at the end of FY22,
Yeah,
came down to 7.3% in the
right.
first quarter. So,
So
do we see a kicker up going forward since raw material prices have eased out?
so of course you see, so edible oil, which was last year average of 125, 130, has shoot up to 150, 116 first quarter. So second quarter we again seeing cooling of the prices, and being edible oil is the biggest purchase for us, and it is again came down to 120, 125 level. So of course we are looking at comparatively good margin compared to first one.
Cesar?
Hi. So I would also like to know how has the demand panned out? If you could just tell us about the demand current scenario.
See, so in first quarter we grown at 25% plus growth over last first quarter, last year first quarter. So it's going good. Last year also, from last three 19 to 21 we are growing at 21% plus CAGR in last 3 years, 19 to 22. And first quarter also we grown at reasonably good demand. We grown at 25%. And also this year Diwali is looking good this year. Post COVID is the first full year where the people is enjoying, and people is enjoying full Diwali without any restriction. So we have seen good demand across all key category, be it sweets, papad, bhujia, namkeens across all. We have seen good demand. Very good demand.
But would you attribute the growth to the price-led growth or volume?
So see, this year it's more of of course it's a mix because we increased the price in last 2 years in multiple times. But this year, like we are growing 25% plus yeah, in first quarter. So it was mix of volume and price. But yeah, of course, volume is double digit growth in volume, high double digit growth.
Okay. Okay. And what kind of cost savings initiatives have you taken to protect your margins so far?
So across all. So basically, in purchasing, we have built a lot of efficiencies. In logistic costs, we have built a lot of efficiency. So we have came up with plant across all part of India. Like in Guwahati, we have started plant in this January. Assam is a core market. Bihar is a core market. So we came up with plant across in all both states. So logistic costs we are trying to improve in the same. Then manufacturing we have also and came up with solar plants to improve on manufacturing cost and power and fuel cost. So we are doing multiple things to improve the cost because we need to be very conscious on this.
Deepak, if you look at your sales profile, as Rishabh was also mentioning, Rajasthan, Bihar, and Assam are the core market for you, contributing more than 74% of your sales. What is the kind of strategy that you have beyond these three states? Because these three are very concentrated sales circles for you.
So strategy for the other focus markets are, like we are giving the extra margins to our traders and distributors. We have Amitabh Bachchan on our board. So by the ITL and BTL activities, we are trying to push our brand in a different geographies and to the retail sector. And then there are some two to three tools that what we are using, that we are doing better services, trying to do better fulfillment and better approach, and by servicing. And like right now, we are in other focus markets, we are going as a challenger brand, not as a leader brand. And so we wanted to be first in top 10, and then in top 5, and then in top 3. So our target is to take step by step and then reach to a certain level.
What about your facilities in these markets? Because I understand that you have nearly a large number of facilities which is there, and then you are concentrating on contract manufacturing as well. So what percentage of your production, I would say, comes from directly facilities owned by you, and what percentage it comes from contract manufacturers?
So in last 1 year, we have set up a few factories like in Guwahati, Muzaffarpur, and recently, the Kanpur as a CMU has also started, and one more is coming at Patna, and we have also in South. So
Yeah.
out of them, only the Kanpur is contains all other subsidiaries units, and this will take another 1 to 2 years to to achieve or to reach to a certain production level. And so by those production level, we will have a better production. Some of the products which we are not able to sell it from our Bikaner or from our Bikaner location, that we are ready to sell. And where we have started selling Western snacks like chips and some light items like murmura and all this bhel puri and all this. So these are the few things which we have already started, and the production facilities are very good facilities, fully automatic and fully controlled. And so that's how we will get the benefits.
I just wanted to get some clarity on your contract manufacturers as well,
Contract-
because
yeah.
especially with respect to Hanuman Agro Foods and Dadiji Snacks and Dade Namkeen. These are group companies, right? In that sense, and you have some bit of exposure in terms of CCPS, which you've invested in Hanuman and Dadiji, and there is an unsecured loan towards Dade Namkeen. So these are what kind of group companies are these, and do you plan to convert this CCPS into equity at some point in time and merge, bring it into a consolidated fold?
So can I take this?
Yeah, please.
Yeah. So see, so Radhe Namkeen is a purely CMU, and normally when you start in a CMU, you need to give some advance to initial to, because they are investing a lot of money for us. That's a pure advance, and we have no intention to convert this because it's a pure loan in Radhe Namkeen. In Dadiji Snacks, so that's also pure CMU, and currently we have no intention to convert this. It's a support to which is given to them, and which we'll get back in coming years once the production will start. But yeah, Hanuman Agro. So in Hanuman Agro, we are given CCPS. Other than Hanuman Agro, we are not given CCPS to any of the company. It's OCD largely, OCD, optionally converted debenture. But in
Okay.
Hanuman Agro, we have issued CCPS, and that's a part of the company and our intention. Yeah. So once we get all the clearance from the government and from the RECO, because it's a RECO land, and there so basically all the investment all the investment which we have done, because it's a largely our investment which has been done in the company. And we started that plant in August 2022. There was some land issue which got cleared in August. So everything has been settled, and that's how we started production. So once we get all the clarity and clarification from RECO industrial area, so we have planned to convert this into a company, and we have planned to make this company as a 100% subsidiary. Hanuman.
So the 109 crores of CCPS will get converted into equity and will
So
bring
see,
it to...
it's a so we have a plan to convert this. We have also CCPS in this CCPS. So we plan to convert CCPS to this. Ultimately, we have planned to merge this company into Bikaji Foods. But
Okay.
yeah, it's a long-term plan. It's a
How
future
much
plan.
of these companies will add production to you in terms of the volumes? What kind of volume increase that you can see once these companies
See,
come in?
we can manufacture Western snacks and namkeen from that plant. It's a big plant, and so close to at a full capacity. We can add close to between 150 to 200 crore rupees of turnover. At a 65-70% type of capacity. But yeah, it's a big capacity. We have came up with lines, and it's a big expansion going on in that plant. So it's expansion in the expansion phase. We just commissioned that plant, so there is space where we can put more plants in that plant, in that facility. So yeah, so at full capacity, we can completely do more to close to 3x of investment of turnover. But yeah, that's at a full capacity. But yeah, it's a very big plant.
Cesar?
What is the capacity in absolute numbers?
Of
Your
overall,
total capacity? Yes.
so see, overall, we have a capacity close to 2.3, 2.4 lakh tons of 2.4 lakh tons a year overall.
Okay. Okay. And what are your plans for exports?
Sorry, Cesar.
Can you hear me?
Yeah.
Yep.
So I was asking, what are your plans for the exports market?
Yeah, Deepakji, can you take this?
Yes. So, ma'am, right now are already present more than in 30 countries, and as you know, the same plans that we are targeting to increasing the sales in a different countries, and so many countries are still pending to enter. So we are entering in a different countries as well, and we are also going the deep down. Like in US and in Gulf countries and in Canada, where we are already there. Also, we are talking in terms with the mainstream lines, like Walmart and all this. So we can hopefully do better in next 4 to 5 years.
Deepak, currently exports are just 5% of your revenues, if I'm not
Correct.
wrong. You also have a PLI scheme where you're manufacturing and you're targeting the export markets. What is the kind of volumes that you have to generate, and what kind of revenue, segment will that be once that takes full steam? Because I think it's already started, right? So over from 22 to 27, you have to meet some certain targets.
Yeah, so we are in line with that, and in next 4 to 5 years we'll achieve the double the numbers what we are right now, and like some of our frozen facilities is coming, and that frozen facility is almost 90% is only export oriented. So we are targeting a very good sales from the next year onwards.
And what percentage of exports will be
As in
Yeah.
the percentage wise, as the domestic market is growing better, and we are focused much higher in the so percentage would be, I think, would be 5-6% nearby, or maybe 7%. But in absolute numbers, it would be definitely double the digit in next 3 to 4 years.
Okay, because you have been growing at the CAGR of 21%. You need to maintain a CAGR of at least 10% as part of the PLI. Otherwise, you don't get the incentive. Is the 21% achievable, Rishabh?
See, so we've grown at risk 20% plus CAGR from the last many years, right? And it's in our RHP, and we have plant which just came up across all part of India this year, and we have a good plan. And see, we are serving to close to 1.5 lakh crore of industry. So street bhujia is uh, close to 60,000 crore of market, 7,000 in fact, and sweets is close to 50,000 crore market. Papad is 10,000 crore market. So we are serving to close to 1.5 lakh crore market, and it's a big industry, and it's a mix of organized and unorganized. So we are very much confident that, but yeah, ultimately it's all about execution, and but we have made a very good plans.
Mm-hmm. What about your ROC? Because return on capital has fallen in the last couple of years
See,
to
so
nearly
last 2 years,
13%.
ROC basically we have tried to maintain our EBITDA, because in FY21 we done EBITDA of close to 11%, but yeah, last year has been tough for us. But yeah, so we have built the capacity across all. We have done a good investment in capacity in last 2 years. But yeah, in next 1 year we'll complete all the capex plan, which we also given in PLI. So once this will be done, there will be no major further big investment in capex which will go on. So and it's all our focus will be on sales and execution, and that's how we'll increase our ROC will increase comparatively much better compared.
So, do you plan to go? When do you see ROC going back to 21%?
See, it's a very futuristic, but yeah, we are very good. So, Sajid, ultimately, see, what's our plan is to we are growing at the same, we are growing at 20% plus CAGR, and our intention is to do better and do better in this, and so that's our plan. ROC is a balancing. ROC is a balancing figure. So we are targeting good numbers in sales. We are targeting good numbers in improvise. We have major cost efficiency program which are going on in the company. So we are trying to improvise on say on EBITDA and profit. So ultimately, so that's a major working which we are doing. And this, you will see this IPO is also only worthless because company doesn't require much fund for growth. We have built a capex side of time. Of course, due to PLI, we have increased some investment earlier, but and also we have built a good capacity. We have built a good capacity. Largely, our target is to use this capacity in next 4-5 years, and this ROC will be we are targeting the ROC in a very good manner, very good way, like all.
So, it is fair to say that by in the next 3 years or 4 years, you will be back to the 20-21% range. Deepak?
So nearby, definitely means we are targeting the same. We are hopefully to cover this much, but nearby that.
Okay. Sesa?
Yeah, I would also like to know about your online strategy. We have seen demand picking up online. Do you have a separate D2C platform, or do you plan to have one?
Yes, ma'am, we have a plans, and right now we are almost in our regions. We are almost in all the platforms, and e-com is very upcoming market, and but still the market is just started, and the absolute numbers are very low, but it's growing very well. So and we have our own website. We have our own direct D2C as well. We have our own facilities, all this, and I believe that after all these facilities, we will be able to cover it much better, because in e-com the most important thing is the supplies, and so we are working on our supplies, and and then in next 1 year or in few months we will do much better.
And how much does e-commerce contribute to your overall sales for now?
So right now,
So see,
in it's very low, so
Okay.
it's nothing like it.
see,
Uh, yeah,
so
Rishabh?
we see. we have grown at 150%. 150%. It's a small number, but yeah, we have done close to 19 crore rupees in FY22 e-commerce platform. It's close to 1.3,
Mhm.
1.4%. But yeah, it's growing a good number, because you will see 2 years back our sale was close to 3 crore rupees, which has been increased to 9, close to 18.7 crore rupees in from e-commerce platform. So it's going good, and we have great focus on this. We have built a separate team for e-commerce platform, because it's a big industry and we cannot want to ignore. We are present across all key platforms. Uh, so focus is big in this.
Okay, and what is your distributor strength
So
across
see,
India?
currently we have close to 2,400 direct indirect distributors, close to 2,400 plus. And so
Okay.
we are also, our target is to increase the distribution across all of focus market largely, because in focus market we are targeting increase in distribution across all levels. And in our core market like Rajasthan, Assam, and Bihar, it's a core market where we are having market share of, like in Rajasthan, I'll tell you our market share is close to 45% in ethnic snacks category. In Assam, we have market share close to 58% in our ethnic snacks category. In Bihar, close to 29%. So we have a very strong foothold across all three core markets. But in focus market, we are targeting increase in distribution, focusing on top selling products. We are also making a product which are of local taste in that focus market. Like in South, there are Southern mixture. In East, there are Kolkata Chanajor. So we are making different localized product also, and focusing to increase sales.
The
Also, we
market
are
is
leveraging.
largely unorganized, right? How do you see the competition coming from regional players?
See, so of course they are doing reasonably good job, but yeah. So see, what's our strength? Our strength is very big category. So we are into bhujia, namkeen, papad, sweets, western snacks. We have maida, cookies. So we are manufacturing plus 250 type of different product. In India, there are very few companies are there who are making this type of product baskets. So it's easy for us to enter into any retail stores, because we are one of the highest manufacturer. We are the highest manufacturer Bikaneri bhujia. We are in papad. We are second highest handmade papad. In sweets, we are the largest in sweets in son papadi, gulab jamun, and rasgulla. So that's our core strength, and that's our ethnicity that we want to take this to every retailer outlet in India. That's what our vision is.
Rishabh, can you give a breakup of how much of sales comes from general trade and how much comes from modern trade for
Yeah,
you?
yeah. So see, close to 85% comes from 85% comes from general trade, and it's our biggest strength, 85%. Close to 5.7% comes from modern trade. Then followed by close to 3.5% from export, because first quarter was first. This is how I'm talking about first quarter. But yeah, normally it's when you see over the year, it's around 4.5%. And e-com platform is small, and others like we are very good in railway, so we are doing reasonably good on institution. So it's close to 4%. So that's but yeah, GT is our biggest, 85%.
I understand that you have a different payment strategy for GT and modern, because while for GT you take advance, for modern
Yeah.
you give them credit. Why is that different strategy that you have?
See, in modern trade across for all food brand, I think they have a payment cycle. Like normally, few company take 7 days, few large modern trade account they take 30 days. So it's a normal trend. That's what we follow. It's a normal for all the food company, all the company in India. So it's a normal. And for GT also, we are giving some credit limit to few old customers. But yeah, for new customers, so majorly it's all advanced. But yeah, for few old customers, we have set the credit limits which we are going on.
Do you see this demand coming from stockists saying that to take them on at parity with the modern trade, because many of the stockists are fighting with other FMCG companies saying that favorable conditions or favorable terms have been given to modern trade as compared to GT. So if that demand goes up, will there be an impact with respect to your working capital requirement, because instead of advance you will start giving credit, and so you will have to increase your working capital?
No, so we have a very strong policy of doing business in advance. And see, from super stockists, like there we have two super stockists which are old for us, like in Assam and Bihar. They are with us from last many years, and we don't see any increase in working capital. We are very efficient in managing working capital cycle. You will see our inventory is also like very managing very efficiently. Like raw material, of course, packaging material, we have some cycle we need to keep to 45 days. But yeah, across raw material or finished good, we keep like finished good. I'll give example. We keep around 4 days. That's it of finished goods. So overall, we are very efficient in working capital and data also. we are not forcing any increase in working capital in GT side largely, because we have very efficient, strong distribution, and we have invested a lot in brand. Like Amitabh Bachchan is a brand ambassador, and it's given a great mileage for us, because it's created a great brand perception across in all the trade channels. So and it has helped us in creating offtake across all among the consumers. So yeah, so we cannot foresee, we are not forcing any increase in working capital.
Deepak, do you see increasingly modern trade having a much larger share of uh, your products, considering the fact that people now tend to order more, and it's especially the family packs, because with that constitute more than 60% of your sales, especially in Bhujia. And impulse buying is only when you go into a store and you pick up one of them. So do you see that trend picking up?
Yeah, it's picking, but we are always trying to balancing our GT market and MT market. And as you know that we are mostly on our core markets is like Rajasthan and Assam, Bihar. So even we are taking the leverages of modern trade to go all India wide as well. Like right now in Maharashtra, in Mumbai, if you want a Bikaji products, then it is not available in the GT market, but it is available, very much available in the modern trade. So we are taking the leverage also. That's how we are giving some benefits to modern trade. But GT is our main priority and always important for us more than the modern trade, and we will try to keep it balanced. And in modern trade, the importantly only the family pack like 1 kg is selling most highest. And in GT market, it's like impulse pack and 200 grams, 400 grams it sells more. So somehow it is balancing, and somehow the competition is there, but still it's not crossing each other, or it's not giving us some pain.
Yes, sir.
Yeah. So, if I have to look at your focus for the next 4 to 5 years, apart from the capacity expansion that you have mentioned, what would be your focus for the next 4 to 5 years for growth?
Ma'am, right now and for next 4 to 5 years, firstly we would like to cover all our the capacities. And we would like to even there is a lot of scope still in our core market as well, like in Assam, in Northeast, and in Bihar as well, in Rajasthan. We see that we can grow much better now, and some of the snacks and some of the snacks which we were not able to sell it right now, we are selling in a very good way, or in very good manners. And as well as in focus market, firstly we will target to be as a challenger brand. We would like to come into an top 3 in next 4 to 5 years, that and we can cover some of the shelves and spaces. And then we will think for the another markets. It's not that we are not covering those markets, like Gujarat. Uh, we have a very good market in Ahmedabad and Surat as well, and good sales. But right now, those markets are only focused for family packs, and mostly focus for our products like bhujia, papad, and sweets. You can differentiate other than Haldiram. Only we are the company where we have all the product mix. Like no one has a top 4 players. They don't have a sweets. They don't have a papad. They don't have a as in a fresh sweets. So this is what we are taking the legacy. And in sweets, the unorganized market is very, very high. Still, I think 90% is unorganized market, and the revolution has just started in the sweets. So we are thinking to big change in sweets market in next 4 to 5 years. So these are the things.
Rishabh, just
Okay,
to
so
get a
within the
clarify,
categories,
sorry, just to get a
sorry, please continue.
just to get a clarification, do you see volatility in revenues in over quarters, Q2 and Q3 being higher than Q1 and Q4?
See, normally there is, so of course sweets is largely uh, from Rakhi Diwali sweet is there, but we have sweet of close to 12 to 12.5% of contribution in business. Overall, our Bhujia Namkeen is a very big share. Bhujia, Namkeen, Western snacks. Overall, these three contribute close to 80%. So it's largely quarter-on-quarter. We will not seeing major upswing. Of course, there is some upswing because quarter two, quarter three is normally close to 2-3% higher compared to other quarters. But yeah, it's not major. So our all quarters are largely same.
Okay. Yes, sir.
Within categories, apart from namkeen, which categories, if you can give me a share of like the percentage of how much each of them contributes, the biggest ones, maybe.
Yeah.
We are there in too many categories at the moment. Yes.
Right. So see, Bhujia is our strength. Bhujia, we close to 35% of business we are doing from Bhujia.
Mhm.
Followed by like Namkeen we are doing close to 35.6%. Packaged sweet close to 13%. Papad close to 6.7%. And Western snacks close to 5.7%. And others being small like gift pack, maida, cookies. There are multiple items. That's close to 2.5%. These numbers I'm talking of June 2022. But yeah, Bhujia and Namkeen, basically, these two contribute close to 71% of our business.
Okay, and any new categories that you would like to enter, or are you planning to enter something in, a potential?
Frozen. Frozen food, we are coming with the frozen food facilities, and in that frozen food, but it would be mostly for the exports.
Okay. Rishabh, I'm running out of time, so I'll ask you the final question. And if Deepak wants to add, he can also add to it. You're coming at a price band of 285 to 300 rupees a share of OFS. Last year to Lighthouse, you made a price issuance of at 220 rupees. How do you justify this jump from 220 to 300 rupees a share?
See, so from last year to this year, we've grown at very good numbers. So in FY22, if you compare to FY21, we've grown at 23% plus growth over in top line. In bottom line, we have managed and we have done a very good job across. You will see other unlisted players. You will see their numbers versus our. We have done a reasonably good job. And in this Feb 2022, this year, Y2 is also invested through his arm, through his few other arm, at the valuation of 7,000 crore rupees in Y2. They've invested and they've taken close to 1% of share in it was secondary deal, but yeah. And this at this price we got a maximum demand at this price. So from anchors. So that's the numbers we have taken and the bankers has guided us. But yeah, at this price we got the maximum demand from anchors. And
what is the price at which White Oak took a stake?
280 rupees.
280 rupees.
Yeah, it's in February.
Deepak, how do you compare yourself with the other competitive listed players like a Pratap and others?
So the Pratap snacks is mostly on the western side and as well as the DFM, and where we are, is more of the ethnic snacks. Like they don't have a sweets and papad. This is what where we are like Bhujia Namkeen. So Namkeen is not the forte for them. So our forte is a Bhujia Namkeen and all this. So we are, portraying as an ethnic snacks brand and not as in Western snacks brand.
Gentlemen, it was a pleasure talking to you today. The Bikaji Foods International IPO opens on November 3rd, closes on November 7th. Price between 285 to 300 rupees a share, valuing the company at 7,500 crores at the upper end of the price band. Thank you very much for joining us on BQ Prime today.
Thank you.
Thank you very much.
Thank you.